What's up, people? How you guys doing? Welcome to another episode of Market Watch. Uh, I'm here with my co-host, my boy Eddie Chinea. I'm your guy. I'm Erik T. Jackson, and we're gonna bring you guys a lot of interesting and really good content today. How you doing, brother?
Everything's good, man. Happy New Year, man.
Same to you, bro. Happy New Year, man. Hope
Happy New
everything
Year
was
to everybody
great.
out there that's watching us, man, supporting the
Yes,
channel.
sir.
How
Yes,
was your New Year,
sir.
man? You guys do anything?
We didn't do anything. We chill, man. So I guess we're
Yeah,
gonna be
bro.
chilling all year, huh?
Yeah, no. Lay low. Sometimes it's the best, man.
That's what I told my kids, man. My little stepdaughter, she went out, but I was telling my oldest son, man, them streets, boy, them streets on fire out there, man. Watch your back.
Man. But yeah, it was good, man. We just hit lay low, get ready for
Hmm.
2023. You guys go back to work already? Y'all back at school?
You can go back tomorrow.
Yeah, so did we get the kids tomorrow too, man.
Y'all do. We don't get the kids tomorrow.
Oh,
It's just like a staff day, and then we got Friday off. So the kids don't come back till Monday.
when did y'all get out though? Did y'all get out early? Did y'all get out?
No, we got out like the 21st, bro.
Oh, okay. So we got out the 16th.
Yeah, we got out
That's
like
fine.
we had to go 3 extra days that next week. So it was crazy. Yeah, yeah. So it's cool. So uh for this episode, let's start out by touching on some things in financial news. Uh our opinions and maybe some things that the listeners or the watchers would be interested in. You got something for us?
Yeah, man. One of the deals, everybody worry about inflation and things like that, uh, especially going in 2023, man, they released the job numbers. All right. So the US job openings, man, said it's still at, 10.5 million, 10.5 million. So the labor market is still showing very, very strong. And it's crazy because that stuff happens and you start to see how the market reacts to that stuff, man. Right. So the market, numbers come out and market's up today.
Yeah,
Except for again, Elon Musk opens his mouth, and this, anything you own that Elon Musk has is going to drop in value.
already.
But no, it's pretty good to see. I mean, to see that, yeah, job numbers, man. They released the Fed minutes also. That was something else. They're talking about that. They released another set of Fed minutes that still going to be rate hikes. Talking about getting up to as high as probably 5.4.
Oh,
Uh,
really?
yeah. So they're not.
Wow.
They'll probably taper off as the increases the way they're based on how they were, right? The four straight 75-point basis hikes and
Yeah.
probably keep it at, it might go another 50, another 25, 25. And I don't think that they stop anytime in 2023. I mean, they might stop increasing, but they're not going to start cutting rates
Yeah.
again. No, I don't think so in 2023, personally.
Huh. Well, uh, I I I hope that they you know, whatever they're doing, man, I hope it works. You know what I'm saying?
Oh, yeah, for sure.
Like I
For sure.
don't want these guys raising interest rates, making it tougher to buy homes or sell homes or whatever, and then this inflation continues for another 10 years. I mean,
We don't need anything like the 80s, man.
yeah,
Boy, the
bro.
80s, the rates were in the 18, 19, 20% back then. Boy, some mortgage rates and everything back in the 80s. I mean,
Yeah,
and it's crazy because the last time the Fed was this, aggressive with those, with the rate hikes was back in the 80s. So just
yeah,
hoping that this stuff don't, turn out where, inflation gets out of control. But I think, look, those people are paid a decent wage to do a job. And, I think that they're going to do it to the best of their ability, probably give them benefit of the doubt.
right,
I mean,
right. Wow, wow. Yeah, man. So I wanted to touch on Tesla a little bit. uh Elon Musk is always in the news. So we could actually touch on Tesla like every show if we wanted to.
oh, yeah.
You know what I'm saying? I know
I'm a
I've
Tesla
had,
holder, baby. So, yeah,
yeah,
I'm with it. I'm a holder.
yeah.
Uh,
I don't currently have a stock, but I have in the past, and maybe I'll get it back if it keeps dropping. I'm sure I'll grab some. Uh, but just looking back on a few things from this year that that was noteworthy for Tesla, starting with April 28th, Elon Musk sold 8 billion worth of Tesla shares. You know, uh, that was like uh, that was before I think we even knew that he was getting ready to purchase Twitter. You know, but before that, like during the whole pandemic, like Tesla shares was killing the game, and that's when I got in on Tesla shares real late, and I still made a gang of money. And this is before the split, obviously, but I got in when the shares were up there, and I still made a lot of money off of my Tesla.
Well, I'm
You
telling you,
know,
man, Tesla was and I still look. I'm still a believer, man.
yeah, yeah, I am too. I am too. But I just had to take that profit. But
Oh, look
but
at it. Let me tell you something. You can never go broke taking a profit. You know what I'm saying?
right,
You know what I
yeah,
mean? So, oh yeah, take some of that money off the table, man.
yeah, yeah,
Especially times like this where you're like, man, I'm glad I did. And all I
right,
keep doing is, it dips a little bit and I'm just gonna buy a
right,
little more. And it dips, I'm
right,
just keep bringing down my, and that's just me personally. Like I said, I'm an owner, I'm a believer, and I think that Tesla will be back. I don't think they ain't going anywhere. I promise you
yeah.
that.
So when I like before the split, Tesla had got I think as high as 2,500, and that's when I owned it. It was as high as 2,500, and now uh it's really what is it about 100 and 30 something like that, and that's after the split. So
Yeah, it's at
you know
100, just under $114 a share right now.
114, yeah. So they've really come down, but you know a lot of it is because Elon Musk has been selling off a lot of shares in order to purchase Twitter. And as he was selling shares, shareholders were nervous,
Oh
and
yeah.
they were selling shares, so it made it continue to drop. And then when the actual purchase of Twitter went through, uh, you know, people wanted him maybe to step down as CEO of Tesla, and the stock just been taking a beating ever since. you know. But still a believer.
So am I. So is Kathy Wood apparently also, man, because she just
Is
bought
she?
another 176,000 shares
Okay,
on
wow.
Tuesday. She bought. So well, I'm sorry how many she has, but right now her ETFs total are almost at 1 million shares since October 3rd. They've purchased
Million shares of Tesla.
since October 3rd, almost 938,000
Wow.
throughout all of
Wow.
her ETFs.
Wow. So yeah, a lot of people are still believers in Elon Musk and Tesla. You know. Uh Elon Musk also disclosed that he had 2 billion worth of Bitcoin. And
Mm.
and he was telling anybody that would listen that he would sell them Teslas, you know, for Bitcoin. Like you can buy a Tesla with Bitcoin, and you know, Bitcoin is way down now as well. So
Oh yeah, yeah.
you know,
But again, it's stuff cyclical, man. You know what I
yeah,
mean? Tesla's not the only one that's been beaten up this year.
right,
You know?
right.
So it's cyclical, man. There's going to be ups, there's going to be downs, and we've been due. I mean, we've been on a bear run, what, 12, almost 14 years?
Yeah, buddy.
You know what I
Yeah,
mean?
man.
12 years. So we've been due.
Right, right, right. So that's a little bit about Tesla being in the news. Also, guys, Coinbase settles for 100 million with the New York regulators. What do you think about that?
And man, I like that. I mean, I think after everybody saw what happened with FTX,
Hmm.
immediately Coinbase, I mean, drops a commercial that talks about, hey, we're basically our accounting practices are, we're transparent. Our stuff is, basically we're going to pass a test with regulators.
Yeah,
We have nothing to hide. Almost taking a shot at FTX, and I think the fact that 50 million of that 100 million is supposed to be going to further improve their compliance
yeah.
is even better to show them that hey, we're here, we're in the U.S. right, we're a U.S. based business,
Hmm.
we do things the right way.
Yeah,
We're a legitimate crypto exchange. I mean, it's so I like it, man. The fact that 100 million, and I mean, realistically, here in the U.S., if you weren't with FTX or you're not with Binance or something like that,
yeah.
you're probably with Coinbase, right?
Right. Absolutely.
Crypto.com. So
Yeah,
being American owned, and the fact that they are, I mean, willing to even deal with regulators. I mean, not trying to battle in court because you guys have no say over crypto, the back and forth. So I like
Right.
it. I do.
Yeah, yeah, me too, man. Me too. And $100 million is a lot just thinking about it, but for Coinbase, it's not going to bankrupt them. So good for
No, not
them.
at all. Yeah, it
Yeah.
is good for them. And I mean, and just being in the business, having my own investment advisory firm, compliance is huge. You know what I mean? Making sure
Mm-hmm,
that you're on the right side and doing things that you're supposed to. Because at any times, they can come and knock on the door and say, "Hey, we need to come through and do an audit." You know what I mean?
yeah,
And you want to make sure you're, ducks and rows. So look, very transparent. I do things the way they're supposed to be done. So I get it, man. Being able to and willing to, to not even combat it and say, well, $50 million towards our compliance is, that's huge.
yeah. So if you're going to spend money, best spend it on something important like compliance.
I mean, if that's a
Absolutely.
big deal, unless you want to run that risk, you know what I mean? You want to run that gamut of possibly not being on the right side of the law, you know what I mean?
Already, already. Good, man. Good. So let's pivot into ETFs of value for 2023. We're gonna look at what kind of ETFs you want to look at.
So man, look at some of the, I guess some of the ones that are more like benchmarks, right? So we'll look at some of
Okay.
the five, the SPDR,
Okay.
and look at, just kind of how they perform, talk about them. Probably go through and explain to everybody what an ETF is also, you know what I mean? People out
Yeah.
here, you know what I mean?
Yeah.
Everybody's just getting the investing game or, maybe been in it, but you still don't know what it is, right? So you talk about what's an ETF, right? So it stands for Exchange Traded Fund, right?
Mm-hmm.
So think
Mm-hmm.
of a pooled investment, all right, that's going to operate very similar to a mutual fund.
Right.
So basically, what you're doing is you're going to buy shares of this ETF, right, which is a
Mm-hmm.
fund, and then that money they take that they pull together from all the people that are investing in it, and then they are the ones that are investing in all the different companies. So
Yeah.
similar to a mutual fund where you invest in the fund, they take the money, they go and buy the shares of all the different things to try to turn a profit.
Partial shares of a lot of different companies in the same sector.
Well, I mean, and it won't even necessarily be partial shares. Sometimes it'll just
Right.
be it will be just shares in like we'll just say one of the spiders, like consumer staples, we'll just say, right, and they might have Coke and Altria and Philip Morris and
Yeah.
Caterpillar, things like what I mean, because they're
Yeah.
all considered consumer staples, right?
Right. For sure.
Campbell Soup, Kroger, things like that. And what they do is they invest in a basket of securities, right? So they might say, hey, for example, we have 250,000 shares of Kroger, we have 100,000 shares of whatever,
Right.
and they take all the money and they invest it, and basically you just watch the price of the fund. So if you're talking about something like consumer staples, right, the
Mm-hmm.
Spider, like $75 a share right now. So the only thing you're concerned about is what that ETF price does, because you
Yeah.
don't own the shares that they're buying. You own shares of the fund.
Exactly.
Yeah. So yeah, I mean, there's a bunch of them, man. I mean, and they just again talking about the spiders, right? Again, SPDR, XLY, right? So you're looking at consumer discretionary.
Mm-hmm.
You've got consumer staples. These are all just different sectors, right? There's like
Yep.
nine of them:
Yep.
energy, financials,
Mm-hmm.
healthcare, industrial, uh, materials, technology, and utilities.
There you go.
You know
There
what I
you
mean?
go.
So
Yep.
that, I mean, that's
Yep.
nine of them, and like I said, a benchmark. So if you wanted to pick some stocks and say, hey, I want to see if I can beat the market, which is not easy to do. I'm not advising anybody does that, but uh, you could do that and just use one of these as the benchmark and say, hey, I'm either going to use the S&P 500 or this ETF. So,
Okay.
but it's a safe bet, low fees. Unlike some mutual funds are very expensive, right? Their net with their ratio, their expense ratios, right? So
Yeah.
it's basically the fees are charging for investing in them. A
Uh-huh.
lot of times these ETFs are like 0.05%, where you might find a mutual fund might be 0.7, right?
Yeah.
1.5%. So that's
Yeah.
another good thing about ETFs. And they don't, so you can buy and sell right now with me. Whereas a
Yeah.
mutual fund, if I put in an order to sell right now, it won't happen until the following trading day when it opens up.
Mm-hmm.
Right. So with an ETF, it's buying and selling just like you would buy and sell, shares of Apple.
Yeah.
Same thing, when with an ETF.
Okay, cool. Cool. Uh do you have one force under the SPDR?
Yeah, yeah. I mean, just give me a second, man. Whatever you like, whatever
Okay.
your flavor is. Here, look, I'll do consumer staples, right? Everybody talking
Okay.
recession, consumer staples is something that people are going to be buying no matter what.
Okay.
So, you know what? You want to see what I'm looking at here?
Yeah, yeah. I enabled it for you if
Gotcha.
you
Let
want
me
to
share
show it.
my screen. There it is. There we go. Bam. All right. So here they are. Again, that's just it's what they refer to them as the spiders. And then there go all the ticker symbols. Anybody looking to look at them. All right.
Okay.
So this was consumer staples. All right. So with consumer staples, you're looking at, again, things that people are going to buy regardless. Right. People are still going to have to buy toilet paper. They're going to have to buy shampoo and soap. And, they're probably going to eat at home more as opposed to going out to eat. Right. So
Okay.
things
So
that
what?
people are always going to be buying.
So what's the ticker symbol for this one?
XLP.
Okay. Consumer
All right.
staples is XLP.
Yep. So then you can go through and you can look at also some of their holdings. All right. So again, I'm on Seeking Alpha. This is what I prefer. I mean, one of the news sources I get my information from. But here go the top 10 holdings, right? So when you buy shares of XLP, they're taking your money, and these are their top 10 companies that they have purchased stock in.
So they have more companies than that, but those are just the top 10.
These are their top 10, right? So
Okay.
they've got 15.5% in Procter and Gamble, almost 11% in Pepsi, right? Coca-Cola,
Yeah.
Costco. I mean, you can read them all there. Philip Morris. Tell you, man, recession's here, consumer staples. People are going to be smoking cigarettes. They're going to be drinking alcohol. You know what I
Already.
mean? Right? Times get stressful. I mean, that's not sugarcoat or anything like that. I mean, hell, I'm guilty of it. I come home after a stressful day and, I'm going to crack a beer. You know what I mean?
Already. Yeah,
So,
definitely.
but Colgate, Palmolive, right? Things that people are going to be doing.
Yeah.
Altria and Philip Morris, look, both of them. So anyway, these are their top 10 holdings. So what you're looking at is you are buying shares of XLP. They're going to go out and invest all the money that they collect from people that are buying these shares, and they're going to go and invest it in the companies that they think are going to turn a profit. And then it's going to be companies that fall under the consumer staples there.
Cool, cool, cool. Uh, absolutely. XLP, the consumer staple, uh, stock. That's one. The price is below $100.
Yep.
You know, but I feel
I mean,
like
look how it came roaring back, man. I mean, look at that from where we at October 10th
yeah,
to where we're at now. I mean, it's been up 12%, and it's been up as high as almost 16.5%.
yeah,
So I
yeah.
mean, from October to now, we're talking about 3 months. You'd have made 12% on your money.
If you're someone that wants to invest in ETFs, you're a Walmart holder, you're a Procter and Gamble holder,
Yeah.
you can definitely get an XLP and uh have more of those shares.
Yeah, so you just buy shares of that fund, man. Like I said, and however many shares that they hold, I'd look if they invest in if they and all those top 10 holdings, I don't own a single share of any of these. The fund owns these shares.
Yeah.
I own shares of that fund. You know what I mean?
Mm-hmm,
But
mm-hmm,
you can see what they're investing in, right? Solid
mm-hmm,
companies, Walmart, right? People that make
mm-hmm.
Marlboro cigarettes, Colgate, Palmolive, Costco, Coke, Pepsi, Procter and Gamble. They're investing in solid companies that they know are going to produce the returns that people are looking for.
Estee
Right.
Lauder
We use this as a
Company.
benchmark. So if I
Right.
were to go through and find 10 other stocks that I like better than these that are in the same industry, right, I can say, all right, I'm going to take my 10 and take their top 10 and see how they produce and see how I produce, right? So you use that as a benchmark to see
Yeah.
based on the stocks that I picked, did I beat the market or did I not beat the market?
Good. Good. I like that one. Let's go to let's go to the one. Which one is that? 3487. XLF. What's that?
XLF financials. So again, XLF, man, again, look, roaring back. Yeah,
Yeah.
man, look at that, about to cross over. Might have a shot for this thing to run. So XLF. This is the SPDR, right?
Yes.
Financial Select Sector, SPDR ETF. Top 10 holdings here. Berkshire Hathaway, Class B, JP Morgan, Bank of America, right? So again, this being specific to a
Yeah.
sector, right? So they're going to
Right.
invest. You're not going to find people holding anything in here that's not related to the financial sector.
BlackRock. Once it said it had Berkshire Hathaway, BlackRock, I'm all in. I'm all in on this one. Bank of
Morgan
America.
Stanley, Goldman, right? Charles
Yeah.
Schwab, Wells Fargo,
Yeah.
Bank of America. I mean, and that's just their top 10. So it's not like that's everyone, that's all of their holdings.
So how much of Berkshire do they hold? What percentage?
15%.
15%.
Yeah,
Okay.
15, 14.84% there.
Cool. 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 You know that so that's what I'm looking for right there. That means something to me. You know what I'm
Oh,
saying?
yeah.
Yeah. So you just
The
have
other
to
thing, you
find
know what
what.
I mean? Go ahead.
Yeah, I was just saying people just need to find in those numbers what means something to them. You know.
Oh. So here's something else that I kind of follow along also, man. CNBC is called the Berkshire Hathaway Portfolio.
Yep.
And it's basically a portfolio tracker of everything that Berkshire Hathaway has in their portfolios.
Oh wow. Yeah.
Yeah.
Yeah. No, that's
So
awesome. That's a good
yeah.
thing to look at. I when I first started investing, I used to follow Berkshire. Also, I followed Bill Gates and his portfolio tough, and I sort of tried to mimic those. And
The ones that do it right, I mean, they're proven. You know what I mean?
yeah,
Investors. So why would you not try to
definitely.
mimic that, right? You
Right.
want to be a millionaire, hang out with millionaires. You want to
Yeah,
be a great basketball player with them, go do what great basketball players do. You want to be a
absolutely.
great investor and do what the great ones do. And here's everything they have.
You
Now, the
can put,
crazy thing is you see all of these securities that they have here.
yeah,
Let me show you something, man. Percentage of portfolio. Look at this. Apple, Bank of America, Chevron. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I think 12 of the holdings they have account for like 90%
yeah,
of their portfolio.
yeah,
So 12 of the
absolutely.
stocks account for 9%, and the other 10% are accounted for with the other 24, 25, whatever it is. Might be like 17. I have
Yeah.
it on the spreadsheet. But anyway,
Okay.
have a good way to, look at it, right? So you want to see kind of what some
Yeah.
of these guys are holding.
Yeah.
Look, a whole lot of Apple.
Yeah.
I mean,
Definitely.
this is crazy. Bank of America, Berkshire Hathaway, 1 billion shares.
A billion shares of Bank of America. He loves the Bank of America.
$35 billion, $35.2 billion worth of Bank of America stock.
Wow.
$115 billion of Apple stock. So anyway,
Yeah.
want to know what the big one's doing? There you go. I mean, two
There you
different
go.
things you can go there. But
Yeah.
back to the ETFs, man.
Yeah, man.
Uh, again, Spider. This one's again straight financials.
Okay.
Look at it, they pay a dividend sometimes, right? It's another thing we should talk about, right? Some of these
Yeah.
ETFs they also pay dividends, which is uh which is always a good thing, right? I mean, getting
Yeah.
paid
Yeah.
a little
Let's
something
see.
while you're investing in the company. So 21 cents they paid. Let's see what was it then?
Probably quarterly.
17,
Yeah.
16. So it's increased.
Yeah.
15. Yeah, so it's gone up.
Yeah.
Financials.
XLV.
Healthcare is another good one. All right.
Let's go to
I mean, a little more
healthcare.
expensive.
XLV.
XLV for healthcare. Again, this just, I mean, talking about being right defensive, right? So you can be a closet investor and try to match the market. And some
Yeah.
people are good with that. So if the market returns 12%, I'm good with that.
Yeah.
Right. Yeah. Could I have, made 18, 22, 32%? Yeah, but I'm okay with keeping that risk, you know what I mean, to what the
Yeah.
market is.
Yeah.
And that's perfectly okay. So the healthcare, again, solid ETF during times like now where they're, all the big, the R word being thrown around, right? Recession, recession, recession,
Right.
healthcare, right? Consumer staples, utilities, energy. Those are going to be kind of your ones to help you build kind of that defensive portfolio where, I mean, again, and had you have gotten in here, look, going back to October at the lows, that thing would have rallied or did rally
Yeah.
if you timed it perfectly, as high as like 18%.
18%. Yeah, man.
Yeah, I mean 18% in 3 months,
Right now
13%.
it's at 13. Yeah.
So you
Yeah.
take that and you annualize it, right?
Yep.
You know what I mean? So 13%, you annualize that. So, but we'll look it up here. XLV, top 10 holdings. All right, again, healthcare, right?
Hmm.
Healthcare sector.
Yep.
And here go the top 10. And look at that, 100% in healthcare.
Johnson and Johnson.
United, Johnson and Johnson, yeah,
Oh,
Eli Lilly.
yeah,
Yes, I own. 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 So,
absolutely.
so the one thing you want to look at if you're going to be buying ETFs is making sure that there really is no overlap. You know what I mean? So, like, if you can buy two of them, but sometimes they will be the same. Have their top 10 holdings, 8 of them
Hmm.
will be the same. You know what I mean?
Okay.
So you want to try to avoid overlap as much as
Yeah.
possible. Now, obviously, if you're going with a sector ETF, then it's just
Right.
going to be in that sector, right? So you're not going to find, building materials, right? The materials sector having healthcare that
Right.
they're invested in. You know what I'm
Yeah.
saying?
Yeah.
So, but there are a ton of ETFs out there for bonds. I mean, there's ETFs for Vanguard's got a list, Fidelity's got a list. I mean, you name it, they're out there.
Yeah. Okay. Awesome, man. Uh, well, I think that's for ETFs for 2023, man. I think the Spider ETFs uh are a good value for anybody that's looking to invest in uh ETFs. We just gave you three consumer staples, XLP, financials, XLF, and healthcare, XLV,
Mm-hmm.
are the ticker symbols. So
Give
uh
them the other one, where are my spiders at? There we go.
what else we got?
Utilities, XOU, another one, right? Utilities,
XLU
yeah.
utilities.
And this is one that I personally own, also XLE, which is energy sector.
Okay,
So
good. And it's at 84, $85.
yeah, 84.39. Actually, was down a penny today,
Oh, okay.
but that consumer discretionary was up big today.
Good.
XLP, XLP was up. Almost everything was up. Market had a good day today.
Yeah.
Had a really good day.
Yeah, it
So
did. Yeah, it did.
yeah, man, that's good, man. For some ETFs, anybody looking, what I mean, for a safer way to invest, you don't know what stocks to pick.
Definitely.
You can find a ETF that invests in a basket of stocks, and you just own shares of that ETF. Sometimes they pay
Absolutely.
a dividend, right? So you just kind of get the
Absolutely.
match the market.
Absolutely. Any questions, leave them in the comments. Hit us up. Go to Facebook, EightOne Capital, on Facebook page, and he'll answer any questions you have, man. He has a great
Oh yeah,
Facebook page on there. Uh, let's look at some books of value for 2023, man.
yeah,
We
man,
haven't
yeah,
done it
yeah,
in a little over a month, so I wanted to give the people some other book choices that they can enjoy for 2023, or at least the beginning of 2023. I know some people read books really quickly, man, so they read like 20 books a year.
yeah,
So
yeah. I got a book list myself, man. Yeah, I don't know if I can see it, hold up to the camera, man, but I got a book list.
there you go.
Yeah, from
It's
2022 that I'm trying to get
2022.
done. Yeah, that I'm trying to get finished up. I
Yes,
got
sir.
through most of the ones that I wanted to. I'm adding new ones now.
Okay.
Yeah, man, it's always good to read.
Yeah. Yeah.
I mean, tell people if you can read and you can add, subtract, multiply, and divide, there is nothing you can't do in life. Like think about math. What's a
Yeah.
square root? Square root is division.
Uh-huh.
What are exponents? You multiplying. You know what I mean?
Uh-huh.
You break it
You
all down, it's just adding. You know what I mean? Just adding a bunch of numbers a bunch of times, man.
you're a
So
killer if you
read,
can
people.
do
Make
all
sure you're
that.
reading.
Absolutely. Absolutely. So I was reading a book
Mhm.
uh that it just caught my eye because I just love this dude, and I think I mentioned him already, but uh and just going through it, man, it's not autobiographical, but it does uh go through his background and everything, and tells you, how he started, and some things like that. But a book that I would like maybe you guys can check out for 2023 is a book called How to Think Like Bill Gates. That's a
Good one.
very good book, man, and
Yeah.
I've been reading it, and I've got to say, I'm not sure if I think like him yet.
Hey, man, look, that doesn't happen overnight, man. You know what I mean? You're talking about
Yeah.
retraining your way of thought, man. That you've done
Hmm.
how old are you? I
Hmm.
mean, how old are you? 28, 29?
Yeah.
You
Hey,
got to think
man.
about that, man. You know how hard it is. I mean, think about how hard it is to break a habit, right?
Yeah.
You know what I
Yeah.
mean? So you got to retrain yourself on how to think, man. That's good. I mean, somebody has been very successful.
Right. How to Think Like Bill Gates, man. It's a really good book, and I highly recommend it, people. You got
Oh
one,
yeah,
brother?
I do, man. So I don't can't remember if I recommended this one last time or not, but it's called Warren Buffett and the Art of Stock Arbitrage.
Okay.
And while it sounds very intimidating, man, it's really not. You're looking for trying to basically minimize your risk, right? Try to be able to invest and get a return with little investment.
Yeah.
You know what I mean? So basic, right? I'll tell you, you have company A, company B, right? We'll just say they're identical. They're identical returns, they have identical risk, whatever, right?
Okay.
One's trading at $100, one trading at $110.
Yeah.
They're almost identical companies.
Yep.
Well, that means one is overvalued, one is undervalued, right? So what's the fair value? So
Yeah.
what people do, it's about arbitrage, and this is just one way to do it is you buy it here at, you buy, go long on the company A, and then you short company B, right? So as
Okay.
prices coming down on company,
Yeah.
on company B, prices coming down, you're
Uh-huh.
making money. As prices going up with company H you invested, you're making money. So it talks about things like that.
Wow.
Anytime mergers and acquisitions happen, right? So if you hear about a company's going to buy somebody else out and they're guaranteeing a certain price per share,
Hmm.
I actually did that with Twitter. Um, I bought, I don't know, I got in 42, $43, $44, something like that. And,
Yeah.
he had guaranteed to buy it at like 53.40 or something like that. So a little thing like that, man. And again, Warren Buffett, look, another one to follow along with, man. I believe it's actually written by his daughter, but it talks about how he goes through, you know what I mean, his thought process, but behind stock arbitrage, right? Trying to
Okay.
find where there's a way to make money
Yeah.
with little to no investment.
Okay. Yeah, I'm gonna have
Yeah.
to read that one.
Nice short read too, man. It ain't even a long read, man. It's a short
Yeah.
read.
That's what's up. That's what's up,
Yeah.
man. Good. Good. Uh, cool, man. We about out of time running through this thing. Uh, so we talked about the ETFs, man. I hope people really take advantage of those things because I do. And when I talk to people, I try and put them on ETFs first, and then they can talk to me about individual stocks later. But I think ETFs are very important. And just looking at the spider ETFs, I think you hit on some good ones. Uh,
Yeah, man. I think it's a good safe way to get going if you're looking to invest, man.
yeah,
If you're looking to invest and you can find some, again, a lot safer than trying to pick them by yourself, man. Because I'll tell you, trying to beat the market is not easy. It
right.
is not easy.
Especially in a bear market, it's a little easier
Oof.
in a bull market, but that'll fool you. It's fool's gold. But yeah, especially in a bear market, brother. You're right about that. Uh, hey, I appreciate you, man. Uh,
Likewise, man.
love your expertise, brother. And
I don't know about expertise, but I'll tell you what, man, I try to stay up or, stay abreast on as much as I can without being fully vetted in the industry and not having that background. I mean, I try to, at least stay in the know.
yes, sir.
So,
Yes, sir.
but I appreciate everybody following, man. I appreciate being on the show. This is good. This is going to be good for next week, too.
Yes, sir. All right, people. I'm Erik T. Jackson. He is.
Eddie Chinea, appreciate it, guys.
Yes, sir. See you later, buddy.
Bye,
Next week.
brother. Take
All right.
care.
All right, babe.